light on the latest announcement and its impact on the economy. We are now joined by Mr. Rahul Bhajuria, Head of India and ASEAN Economic Research at BofA Global Research. Mr. Bhajuria, thank you so much for joining us here today on ET Now. First up, what do you make of the announcement that came in yesterday, and what kind of benefits will Indian economy enjoy in the medium term, say 2 to 3 years, on account of this?
Sure. So I think what it really does immediately is take off the pall of uncertainty that's been there on the Indian economy, despite having, I would say, a pretty significant improvement in the fundamentals domestically. The external environment has been quite challenging. And what this particular deal does, coming within a week of the EU FTA being signed, is basically, turbocharge in a way expectations of the external sector sort of holding up in the next few quarters and years. I think unlike the EU FTA, which will still need some time for it to kind of feed through, I think the US reciprocal tariffs coming down is going to be an immediate improvement in the numbers, right? And we should see several labor-intensive sectors which are facing 50% tariffs, immediately see a lowering of the tariff hit, and that hopefully restores the long-term order books. But at the same time, what it does is that gives a certain amount of certainty for investment planning, and probably helps market sentiment both on the equity and the fixed income side, which also hopefully crowds in some capital flows as well, which is something that's been missing. So overall, a big positive, from removing the primary source of uncertainty that the Indian economy was facing, and hopefully the macro outcomes will follow in the next quarter or two.
Okay, so that's on that. But Rahul, hi, good afternoon. You track the ASEAN space very closely. With India's tariffs at 18%, now this is lower than some of the neighbors, some countries like Thailand, Philippines, Malaysia, Indonesia, Vietnam. Talk to us about how competitive this is going to make India's exports. Is there going to be a meaningful preference tilt towards India, or are you not penciling in that right now?
So that's a great question. And our sense is that it will prima facie, add to the attractiveness, because not only is India getting a better rate on a relative basis to many other countries within the region, but then also it has signed a bunch of FTAs, which obviously incentivizes both their importers to also look at India as a very serious sourcing destination. My sense is that given the current mix of exports which are doing well within the wider region in Asia, it's the electronics, AI related trade. So maybe the immediate impact is going to be limited, but certainly for a lot of the labor intensive stuff like say textiles, engineering goods, when we look at even smartphone assembly, I think a lot of those areas are likely to benefit, over a short period of time. So it does kind of improve the competitive landscape of the product suite. And then at the same time also encourages India to basically keep getting plugged into the global supply chains, right? Which I think is a very important dynamic we have been pursuing for the last few years, which will make India quite competitive relative to the ASEAN peers.
So India is likely to become competitive as compared to ASEAN peers. But Mr. Bhajuria, what do you make of the impact on India's growth numbers, say, for example, GDP numbers? Any kind of direct impact that you foresee in the foreseeable future?
Yeah, so we did raise our GDP estimates at the start of this calendar year from 6.5% to 6.8%. That was essentially acknowledging the improvement in the high frequency numbers that we had been seeing post the GST cuts. But then also they have held up despite the fact that, GST cuts were about 3-4 months back. We are waiting for the fine print of, what exactly has India eased upon, but we are flagging upside risks to this number. I think what this essentially does is that, when in April, when Liberation Day had come about, we had estimated potentially anywhere between 50 to 90 basis points hit to real GDP, depending on what the extent of the tariffs measures were going to be put. Our sense is that, it is conceivable that, the upside could be as high as pushing the growth rates closer to the upper end of the government target, which was, say, 6.8% to 7.2%. But I think a 7% number looks pretty likely with the current set of, assumptions that are being laid out, because the effective tariff rates are going to drop from around 35% down to about 12-13% is what we are estimating looking at the current export mix.
And Rahul, also want to get your sense on currency. Now, last year, you have currencies from South Korea that have done really well, for example, and Rupee has been a massive underperformer within Asia and globally as well. Do you believe this trade deal is once again now looking at, or it's going to lead to some strengthening in the Rupee, and our currency also could get perhaps more favorable or attractive compared to Asian peers?
It will certainly add to the attractiveness at the margin, because we have seen this today in the price action as well, with the rupee appreciating pretty sharply compared to its peers, while everything else is also doing well. I think the longer term question really comes down to two things. I mean, one is capital flows, whether we see a return of portfolio flows and FDI into both the equity markets and the fixed income markets. That I think still remains a bit of an open question, because there are obviously attractive points about the North Asian markets, which have done extremely well relative to India in the last 18 months. But now with this drag going away, maybe India does play a bit of catch up. The second factor here is the RBI, right? Because the RBI has seen the rupee become much more competitive on a real basis in the last year or so, and it does kind of help in mitigating the tariff impact. It was helping a lot. I think it will still help at the margin. So at what point does the RBI try to stabilize the currency? At what point do they start buying reserves? I think that's the secondary consideration. But yeah, we are looking for dollar INR to trade a little bit weaker, as in INR a bit stronger in the next few days, and then we will see what the picture looks like on the flows side, which will probably be a bigger determinant over the next 3 to 6 months.
Right, so that's the view on the economy and the currency, which has been in focus for the last several months. Mr. Bhajuria, thank you so much for taking your time out and joining us here on ET Now on such an important day. Thanks so much for joining us today. On that note, we need to slip into a very short break, but more news and updates will continue on the other side.